Welcome to Two Blondes and a Brokerage, and today we're going to talk about how current events are impacting today's rates.
Thanks again for having me, guys. So from a very high level, sometimes it's difficult for a consumer to wrap their mind around this topic, but in general, the best way to think of long-term rates, specifically related to a mortgage transaction, is that product really is a commodity, just like anything else in the market. So think of it the same principal effect, if you will, as the bond market or the equities or other tangible commodities, oil markets, etc. So anytime you're seeing economic data move up or down, it definitely is going to have some type of impact on long-term interest rates. Now, specifically to long-term rates, that isn't necessarily tied to what the Fed does for short-term rate decisions. So when you hear the Fed talking about them raising short-term rates 25 basis points or 50 basis points, that doesn't necessarily impact a 30-year fixed mortgage. But what the Fed's decision does do that impacts long-term rates is their ability to purchase mortgage-backed securities. So mortgage-backed securities are basically the vehicle, if you will, that's funneling a mortgage interest rate into a packaged commodity that's then securitized through a third-party agency, for example, Fannie Mae or Freddie Mac. So what's happening in the marketplace right now is prior to the Russia-Ukraine situation, the Fed was easing their purchase of mortgage-backed securities because they wanted to raise long-term interest rates and keep them on somewhat of a steady rise. And their motivation to do that was to fend off and curb some inflation concerns. Now that this conflict is going on over between Russia and Ukraine, it's having a global impact now on things such as oil prices, the shift or exchange of currencies from one marketplace to the next, and so on and so on. So anytime you're seeing a global event like this that's going to have economic impact, it will potentially influence the Fed's decision on what they should do with long-term rates. Translation, what they should do with purchasing mortgage-backed securities. As they increase those purchases, they're doing so to potentially try to bring the rates down a little bit on a long-term basis. As they start to peel back those purchases or deliver and reduce the balance sheet, as they may refer to that, that means you're looking at the market data pushing long-term rates up. So as it stands right now, in conflict that we're in right now, economically speaking, it means that things are going to be very volatile. So as an example, just last week, you would have seen a shift up and down of about 120 basis points in the mortgage-backed securities market. To put that into perspective, there's a lot of months where we don't see that kind of activity up and down with mortgage-backed securities. So the translation for a potential home buyer is you want to keep a very good pulse with your lender as to where your specific rate is in terms of your pre-approval, to make sure that a rising interest rate specifically isn't going to change your purchase power as you're out there looking at homes. So in times like this, I would encourage any buyer, stay in very close communication with your lender, even on a daily basis, to get a gauge of what rate movement is doing and how that impacts your qualifications as a potential buyer.
So Dave, just to give people a good example, like what does a quarter point percentage impact a buyer's purchasing power?
It's a great question. So when you're looking at interest rates versus mortgage-backed securities prices, if you see the change of about 0.25% in a mortgage-backed security, you're looking at the rate changing about 0.125%. So let's say you saw that change 4 or 5 times over, you might see your interest rate change 0.5%. Now, in this housing market that we're in now, if you're talking about loan amounts between $500,000 or $600,000, a 0.5% rate change, you're talking about a payment change of hundreds of dollars per month, which could absolutely have impact on their qualification.
Gotcha. So it's just really important to stay in touch with you and to know what is going on in the market currently and how that's going to impact their purchasing power.
100%.
I think it's helpful us as realtors anytime we are, I feel like we do it anyways, but now more than ever, just sending you properties that we're gonna go show to potential clients so that we know before we waste a seller's time or our time or get our buyers' hopes up of this is gonna throw you out of the running because of what is currently happening with the rates, so.
Yeah, and I think
Absolutely.
that's like a great partnership to have, because we know list price is not what homes are selling for, so we need to be realistic both about what potential purchase price could be, and then also what the potential interest rate could be, given the time.
Yep, absolutely agree. Yeah, great points.
Well, hopefully we can continue to get updates from you, so we know what is going on, kind of on a daily, weekly basis, and then we can always update you guys. But if you ever have questions, feel free to reach out. You know where to find us, and we're happy to answer any questions you have.
Awesome, have a great day.